Welcome to Kharoo channel. We are solving depreciation sum as per WDV method, and in this video we are going to solve practical problem 2, that is on page number 246. Let's read the sum. Question 2. Vishal Company Dhule purchased machinery costing rupees 60,000 on 1st April 2006. So on 1st April 2016 they purchased machinery 1 for 60,000. They purchased further machinery on 1st October 2017 costing rupees 30,000. On 1st October 17, machinery 2 they purchased for 30,000. Correct? And on 1st July 2018 costing rupees 20,000. 1st July 18 machinery 3 purchased for 20,000. On 1st Jan 2019, 1/3 of the machinery which was purchased on 1st April 2016 became obsolete and it was sold for rupees 18,000. So this machinery, 1/3 of this machinery was sold. So we have to divide this machinery into two parts. Machinery 1A and machinery 1B. A will be 1/3. 1/3 of 60,000 is 20,000 and the remaining amount is 40,000. So the machinery of 20,000 was sold on 1st Jan 2019, right? So we will write M1A and here sale, and it was sold for 18,000. 18,000. Okay. Assume that company account closes on 31st March every year. Show machinery account for first 3 years and pass journal entries for third year after charging depreciation at 10% per annum on written down value method. So method is WDV at the rate 10% per annum, right? We have to open machinery account for 3 years. This is financial year 16-17. This is 17-18. This is 18-19. And this is also in 18-19. So this is how the summary is. And for this year, that is last year, third year, we have to pass journal entries. With this summary, we can do our working note. Working note 1, calculation of depreciation. This is as per WDV at the rate 10%. Particulars. Here we have 3 machinery. But first machinery, we are going to split it in 2 because 1/3 of it we are going to sell it off later on. So obviously, practically we don't know when we are going to sell. We don't split this amount in first year itself. But since this is a question, an exam question, we have all the data, and splitting this up in the third year will be difficult. So it's better to split it in first year itself. So M1A, M1B, M2, M3 and total depreciation. Okay. We will need purchase date and purchase amount. So the first machinery was purchased on 1st April 16. So your 1st April 16, 1st April 16, and it was split in two amounts. 60,000 amount is split in 20,000 and 40,000. Then is machinery 2 purchased on 1st October 17 for 30,000, and third machinery was purchased on 1st July 18 for 20,000. Let's start the depreciation working. Depreciation for financial year 16-17. The first asset that is split in 2 was purchased on 1st April 2016 and it was used for the entire year. So the depreciation will be for entire year. 10% is 2,000 and 4,000. The other two machineries were not purchased, so this will be dash and dash. The total depreciation is 6,000 The WDV amount will be as on 31/3/17, 18,000, and 40 minus 4 is 36,000. These amounts are not there, and total will be 54,000. So this is first year. Now in second year, we have purchased this machinery, right? So less depreciation for financial year 17/18. This machinery was purchased in between the year. So we will have to do the working 30,000 into 10% into, it was purchased on 1st October. So the asset was in the business for October, November, December, Jan, Feb, March. That is for 6 months. So 30,000 into 10% is 3%, and into 6 divided by 12, that is half, will be 1500. This machine was not purchased yet, and since this is WDV, we'll do the 10% calculation on 18,000. That will be 1800, and 36,000 will be 3600. So we have all our depreciation amounts. Let's do the total. 1800 plus 3600 plus 1500, that is 6,900. And WDV as on 31/3/18 will be 18,000 minus 1800, that is 16,200. Since this is double, we can just do into 2 into 2, 32,400. 30,000 minus 1500 is 28,500, and last machine is not there. So WDV will be 32,400 plus 16,200 plus 28,500, that is 77,100. Then depreciation for third year, we are doing working for 3 years, right? So this is last year 18/19. We have purchased this machinery 3 and sold machinery once 1/3 part, right? So for third machinery, we will need working as the machinery was purchased in between the year, that is on 1st July. So working 20,000 into 10% into July, August, September, October, November, December, Jan, Feb, March, that is for 9 months. It was in business. So depreciation will be calculated for 9 months. 20,000 into 10% is 2,000, and 2,000 into 9 divided by 12 will be 1500. 1500. Second part of machinery 1 and machinery 2, these two assets were used for whole year. So the depreciation will be 10% on WDV, 3240 and 2850. Okay, and so first machinery, we are selling it off on 1st January 2019. So we'll have to do the working 16,200 into 10%, but the machinery was used in the business from April, May, June, July, August, September, October, November, December. That is for 9 months. On 1st January, it was sold off, right? So for 9 months, 9 divided by 12. Let's do the working. 16,200 into 10% is 1620. Into 9 divided by 12. We'll get 1215. So let's do the depreciation total now. 1215 plus 3240 plus 2850 plus 1500. We've got 8,805. Correct? And after this, we'll do the WDV as on last 31/3/19. 16,200 minus 1215, that is 14,985. Then 32,400 minus 3240 is 29,160. Then 28,500 minus 2850, that is 25,650. And from 20,000, 1500 is 20,000 minus 1,000 is 19,000, minus 500 is 18,500. So this WDV total will be 25,650 plus 18,500 plus 79160. That is 73,310. In this amount, we have not included this value. Why? Because we are going to sell this off, right? So this amount will not be there at the year end in the WDV value. This WDV is as on 1st Jan 2019. That is the sale date, right, of that machinery, machinery 1. So we will have to do the working of profit or loss from sale of this machine. Let's do that. Working note 2, profit or loss from sale of asset, sale of machinery. In our case here we have taken it as M1A. So how we will calculate? Sale amount minus WDV as on date of sale, that is as on 1st Jan 2019, right? This amount, this date, this date. The sale amount is 18,000, and WDV as on 1st Jan is this 14,985, 14,985. So what we are getting? 18,000 minus 14,985. We are getting a profit of 3,015. Profit on sale of machinery 1. So the working is done. Now both the workings are ready, and now we can open the machinery account, right? In the books of Vishal Company Dhule, and we need machinery account, and we also need journal book, and we also need to pass journal entries for 3rd year. So journal of Vishal Company Dhule. We will start with machinery account. First machinery was purchased on 1st April 2016, and we have split it up in 2 because 1/3 of it was sold off later on. But while passing the journal entry, when we purchased it on 1st April 2016, we will pass one entry only, right? Machinery account debit to bank account, cash or bank account, generally bank account. Big amounts we don't generally pay in cash. So bank account. So 20 plus 40, that is 60,000, will pass one entry on 1st April 16 to bank account. Machinery account debit to bank account. Amount is 60,000. And then during this year, there are no other purchase sale entries. So at the year end, we will pass depreciation entry. 70 by depreciation. The entries depreciation account debit to machinery account, right? So we are crediting machinery account by depreciation account. The amount is 6,000 here, right? 6,000. So no other entries are there. We can close the books. 60,000, 60,000. And the balancing figure will be 60,000 minus 6,000, that is 54,000. By balance close down. And on the next day, we will carry that amount forward in next year to balance brought down. 54,000. And this amount matches with our working, 54,000. So in second year, we have purchased another machinery. This is machine 2 for 30,000. So we'll pass this entry. It was purchased on 1st October 17, and we have paid through bank. So to bank account, machinery account debit to bank account. The amount is 30,000. And no purchase sale entries are there other than this. So we can pass depreciation entry 6,900. The total depreciation is 6,900. So at the year end 31/3/18 by depreciation 6,900. No other entries are there, so we can close the books. 84,000, 84,000, 84,000 minus 6,900 will give 77,100. So the balancing figure is by balance close down 77,100. This amount we will carry forward in next year, 1st April 18 to balance brought down. The amount is 77,100. This amount matches with our working 77,100. So this way second year entries are done, and in third year we have one purchase and one sale. First transaction was of purchase, so we will do the purchase entry first. On 1st July it was 20,000. 20,000 machinery was purchased. So machinery account debit to bank account on 1st July 18. This machinery on 1st July 18, the amount is 20,000. And after purchase entry there is one sale entry. For sale entry you can see that sale amount is 18,000, so we are going to receive this amount in our bank, so we'll debit this to bank account, right? And the asset is going out of business. The WDV of asset is, the book value of the asset is 14,985, so we'll credit this amount. This is machinery account, the effect will go to machinery account. And profit on sale of machinery, we credit the incomes and gains, right? So this amount will be credited. So we have one debit and two credits. Machinery account we are going to credit. So to give the credit effect to machinery account, we'll credit the amount with 14,985. But before doing this, let's pass the depreciation entry on the asset that we are selling. We are selling machinery 1, this one here, right? This one we are selling, and the depreciation amount is 1215 on 1st January 2019. So we will first pass this depreciation entry. This will be on date of sale, 1st Jan 2019. By depreciation, the amount is 1215. And after this, we are going to pass the sale entry of machinery. And in this, we have analyzed bank account will be debited with 18,000 and machinery account will be credited with 14,985 with a profit of 3,015. So to credit the machinery account with 14,985, we will debit bank account and credit profit and loss account. 18,000 minus 3,000, we will get 14,985. So on 1st Jan 2019, we have received 18,000 by bank account. 18,000, we have credited 18,000, but we were required to credit 14,985. So we will give the debit effect of profit to profit on sale of machinery. This is 3,015. So for 18,000 credit, we also have 3,015 debit. This net effect will give the credit effect of 14,985, right? The machinery of this amount is going out of business. This is the effect, right? So with this, our sale entry is also done. And now we have other three machines, the depreciation on it, 3,240, 2,850 and 1,500. These depreciations we have to pass, right? So the total of these will take 3,240 plus 2,850 plus 1,500. So the amount is 7,590. This we will pass on last day of the year, right? 31st, 319 by depreciation. This one is on M1A and these depreciation is on M1B plus M2 plus M3. This is for your reference. In exam you need not write this. The amount is 7,590. So all the entries are done. We can close the books. Let's do the total. 77,100 plus 20,000 plus 3,015. That is 1,115. And from that minus 1,215 minus 18,000 minus 7,590. That will give us 73 310. This is 1,115,000. So the balancing figure is as on 31st March by balance closed down. And this amount we will carry forward in next year on 1st April 19 to balance brought down. The amount is 73,310, and this amount matches with our working 73,310. Oh yes, for third year we were required to pass journal entries. We have already done the posting, but it's better to first do the journal entries so that we can take the help of journal entries to do the posting. Your date is missing, right? 1/1/19. So let's pass the journal entries. Generally we should do this first and then do the posting. So, but we have already done the posting. Let's do the journal entries. Now you have all the transactions in front of you. First transaction will be of purchase and then sale. First purchase on 1st July 18. Machinery account is debited. Machinery account debit to bank account. The amount is 20,000, being machinery purchased. And then we have sold one asset, and for that we'll start with depreciation entry. Depreciation on the asset that was sold. Depreciation account debit, that was 1,215. 1,215 to machinery account 1,215, being depreciation charged on asset sold. You can write that. Then on same date we have sold the asset. When we sold, we received amount in bank, so bank account is debited. Debit the receiver. We have received 18,000 from selling the asset. To the asset is going out of the business. Credit what goes out, machinery account, and the WDV was 14,985. 14,985. And 2, there was profit from sale of asset. To profit on sale of machinery, the amount is 3,015. This way 18,000 debits and credits are equal, being machinery, you can write M1A sold. Instead of M1A and M1B and making it a bit complicated to write, you can directly split this in M1, M2 and make this M3 and M4. That is also alright. So our sale of asset is done, and now the depreciation on remaining assets, that will be on last day. Depreciation account debit to machinery account. The amount is 7590. 7590, 7590, being depreciation charged. So all the entries that are in ledger are passed in our journal, right? But the question has asked for third year entries and not just purchase and sale and depreciation entries. After this, what we do at the year end, we pass year end entries. We transfer the balances of nominal account. In our case, we have 2 nominal accounts. We transfer it to profit and loss account to find the profit or loss of the business. So we transfer depreciation account, and we have another nominal account. This is profit on sale of machinery account, and we have this depreciation account also. So for depreciation account 1 entry, and for profit on sale of machinery account 1 entry. These balances of nominal account we will transfer to profit and loss account. So on last day, since depreciation account is debited, we will debit P&L account. P&L account debit to depreciation account. And since we are passing just one entry, we will take the total of 1,215 and 7590. That is the total we have in our working, right? 8805. This one, 8805, 8805, being balance of depreciation transferred to profit and loss account. And now the profit on sale of machinery account. Since this is credited, we'll debit it to reverse the effect, right? On 31st March 19, we will debit profit on sale of machinery, debit to P&L account. The amount is 3015, 3015, 3015, 3015 being profit transferred to P&L account. With this, we have passed all the journal entries for the third year. So what have we done in this sum? With the help of summary of the sum, we made working note 1, that is calculation of depreciation. With this, we got the WDV of the assets sold, and in working note 2, we found out what was the profit or loss from the sale of machinery. We got profit. With these working note, we prepared machinery account and did the posting for 3 years. For third year, we also passed journal entries after posting. Actually, we should have done this before posting, but that's okay. So this is your practical problem 1 as per WDV method in your textbook exercise. That's it for the video. If you find this video useful, please like the video, share it with your friends, and subscribe for future notifications.